Keys to Passing NetSuite Financial User Exam Part 3. In the previous session, we have been able to discuss the introduction to NetSuite financial management concepts, including overview of being a certified financial user in NetSuite, the coverage of the exam and in-depth discussion of topics that includes subsidiaries, classification and chart of accounts, and first part of accounts receivable. In this module, we will continue in-depth discussion of the coverage of the exam that starts with the continuation of accounts receivable discussion. 3. Billing schedules. Setting up and applying billing schedules in NetSuite can help automate the invoicing process for recurring or subscription-based services. NetSuite. Here are the general steps for setting up and applying billing schedules in NetSuite. Create a billing schedule. Navigate to the List menu, select Accounting, and then select Billing Schedules, then select New. Fill in the necessary information, such as the schedule name, frequency, and start date. Create a customer record. Navigate to the List menu, and then select Relationships, click Client, then click New, to create a new customer record. Fill in the necessary information, such as the customer name and contact information. Create a sales order. Navigate to the Transactions menu, select Sales, and then select Enter Sales Order. Fill in the necessary information, such as the customer, items, and billing schedule. Apply the billing schedule to the sales order. In the sales order form, select the billing schedule you created from the Billing Schedule drop-down. Approve the sales order. Once you have saved the sales order, you need to approve it for the billing schedule to take effect. Run the billing process. To generate invoices for the recurring charges, navigate to the Transactions menu, select Billing, and then select Run Billing. Review and process invoices. The generated invoices can be reviewed and processed in the Invoices tab of the customer record. Review and print or email the invoices for customers' records. 4. Accounts payable. Account payable process flow. The accounts payable app process flow in NetSuite involves a series of steps to record and track payments to vendors for goods or services received. This process can include the following steps. Vendor setup. Before making any payments to vendors, it's necessary to create vendor records in NetSuite. This is done by navigating to the Lists menu, selecting Relationships, and then selecting Vendors, then select New. Here, you can create a new vendor record, providing information such as the vendor name, contact information, and payment terms. Purchase order (PO) creation. After creating the vendor record, navigate to Transactions menu, select Purchases, and then select Enter Purchase Order to create a purchase order to vendors. This includes details such as vendor, items, quantities, and pricing. Vendor invoice. Upon receiving the goods or services, the vendor will bill the company. In NetSuite, you can enter the vendor invoice by navigating to the Transactions menu, selecting Payables, and then selecting Enter Bills. You can then match the purchase order to the vendor invoice for accurate record keeping. This is what you call three-way matching. Approval workflows. Depending on the company's specific procedures, vendor invoices may need to go through an approval workflow before they can be paid. This can be done by routing the invoice to the appropriate individuals for review and approval. Payment processing. After all approvals are in place, the vendor invoice will be ready to be paid. This is done by creating a payment in Banking menu, select Pay Bills, select the bills to be paid and proceed to pay. You can pay bills through this or through vendor bills. Reconciliation. To ensure that all vendor invoices have been paid, it is important to reconcile the vendor account with the payments made. This is done by comparing the vendor's statements with the company's records, and making any necessary adjustments. Reporting and analysis. NetSuite provides a variety of reports that can be generated to analyze the accounts payable process, such as vendor aging, vendor payments, and purchase history. Keep in mind that the specific steps may vary based on the settings and customizations of your NetSuite instance, so it's recommended to check with your administrator or refer to NetSuite's documentation for detailed information. NetSuite allows to create payments in batch. You can select multiple bills at once and pay them in a single payment. It streamlines the process of paying vendors by reducing the number of steps required. For payments made by check, NetSuite allows you to print checks. You can configure check layout and also print multiple checks at once. For payments made by ARC or credit card, you need to configure the bank account details and also the vendor's bank details. For payments made by credit card, it's necessary to check that the vendor is set up to accept credit card payments in their record before making the payment. 5. Banking and payment processing. Default banking transaction steps. In NetSuite, default banking transactions are a set of predefined transaction types that are used to record common banking transactions, such as deposits, checks, and credit card charges. Here are the general steps for recognizing and processing default banking transactions in NetSuite. 1. Record the transaction. Navigate to the Transactions menu, select Banking, and then select the appropriate transaction type, e.g., deposit, check, credit card charge. Fill in the necessary information, such as the date, account, and amount. 2. Assign the transaction to a bank account. In the transaction form, select the bank account to which the transaction should be assigned from the Account drop-down. 3. Matching to the appropriate records. Depending on the type of transaction, it may be necessary to match the transaction to other records, such as invoices or bills. Monthly bank and credit card reconciliation process. Reconciling monthly bank and credit card statements in NetSuite is an important process to ensure that the company's records match the statements from the bank or credit card company, and to identify and resolve any discrepancies. Here are the general steps for reconciling bank and credit card statements in NetSuite. 1. Import the bank or credit card statement. NetSuite allows you to import bank or credit card statements from a file in a supported format, like .csv or .ofx, by navigating to the Transactions menu, select Bank, and then select Match Bank Data. Match transactions. In the statement reconciliation page, match the transactions in the statement with the transactions in the system by clicking on the Match button. Any transactions that do not match will be flagged as uncleared. Resolve discrepancies. If there are any discrepancies between the statement and the system, it will be shown as to be matched transactions. It will be necessary to resolve these discrepancies by researching the cause of the discrepancy and making the appropriate adjustments to the records. Finalize the statement. Once all transactions are matched, cleared and reconciled and any discrepancies are resolved, you can submit the reconciled transactions by clicking on the Review tab and clicking Submit button. This will help the system to record all the statements as reconciled and locked. 6. Journal entries. Journal entry considerations in NetSuite. To create a new journal entry, navigate to the Transactions menu, select Financial, and then select Make Journal Entries. Fill in the necessary information, such as the date, memo, and reference number. Creating journal entries manually within the system can be beneficial because it allows you to enter the information directly into the system and verify the data before it is recorded. This method gives you more control over the accuracy of the journal entries and allows you to make any necessary adjustments before the entries are recorded. On the other hand, importing journal entries from an external file can save time and resources, as it allows you to quickly and easily load large amounts of data into the system. This method can be useful for organizations that have a large volume of transactions to record or for those that use other systems to generate journal entries. When importing journal entries, make sure that the file format is compatible with NetSuite and that the data is accurate, complete and in the correct format. Also, you need to check and clean the data from any error or inconsistencies before importing. However, whether you are importing or manually entering journal entries, it is important to review and verify the data before it is recorded to ensure the accuracy of the general ledger. It is also important to follow the internal control and compliance requirements. Elimination and intercompany journal entries. In NetSuite, elimination and intercompany journal entries are used to record financial transactions between related companies. However, there are some differences in their setup and usage. Elimination journal entries are used to remove the effect of intercompany transactions on the consolidated financial statements of a parent company and its subsidiaries. It is set up by creating a special account called Elimination Account. This account will be used as the offset account when recording elimination entries. The elimination entries are usually recorded at the end of the financial period after all transactions have been recorded. They are typically used to eliminate the effects of transactions between a parent company and its subsidiaries, such as intercompany sales, intercompany loans, and intercompany dividends. Intercompany journal entries are used to record transactions between related companies, such as sales or payments. They are typically used to record transactions between a parent company and its subsidiaries, such as sales of goods or services, payments, and loans. Both types of entries play an important role in keeping the books of the parent company and its subsidiaries accurate and complete, making the financial statements more informative and reliable. Continue to Part 3 for more topics.